Check out the video description for details.
It's Tuesday, November 28th. This video should be going up prior to the market opening. Lot to cover today. We're going to do a quick portfolio update as the market's been a little volatile since last video that we posted, and so we'll show what the kids' portfolio is doing, and then we're going to talk all about GameStop's earnings. So let's take a look, first of all, at the kids' portfolio. How it's performing. GameStop, we'll get to that. GameStop overall is down 10%. We've averaged our price down pretty good, but still lagging. Apple's doing good. Nintendo is the big winner. 109% it's up, and the stock just keeps roaring. AT&T's lagging, down 11, almost 12%. Disney down almost 7. Activision's a good plus 20. WWE's plus 30. Qualcomm up 24% almost. Collectors Universe 10%. This stock has been pretty cheap and discounted. It's balanced back. We like its dividend. It's a very small cap. Seagate is still lagging behind. Coke's done all right. Hasbro, we like Hasbro under 100, so we could very well be adding to that in December. We're actually going to add to it, and GameStop dropped to a ridiculously low price, so we had to get it. Square is up 51%, and we are expecting even bigger things from them. It's hard to buy in at this premium, but they haven't even really fully supported the Switch yet, so we're waiting for a bigger pop on that. Sega, they've been up 10% generally since we bought them. They're down 10% now. Didn't gain as much traction as we thought this year with some of the new releases, but they want to get into gaming in a big way and have a comeback. So we'll see. It's a pretty cheap speculative stock. McDonald's 10% there. Foot Locker bounced back a little bit, but they're down 14%. We got a little greedy, bottom feeding in some of the retail stocks, and Foot Locker certainly took a beating. Overall, up 10%. Not bad. The dividend income per year, I haven't updated it in a little while, but it's $147. 3.2% is what the kids' dividend is up to a year. So this is a 10 to 15 year plus portfolio that we're building for the kids, and going over what we do along the way. So there'll be some good picks and some bad picks. Viewer picks typically have performed a little bit better than the kids' portfolio, but everyone here who's watching, hopefully they're here to learn or give advice to new people that are investing in stocks. So let's talk about GameStop's earnings. Big earnings, big pop off the earnings. I'll pull that up here. It was honestly about on par with some of their recent earnings reports. It's just they finally gained some traction on this one, and they got the pop. They've been sinking the last few earnings reports because their outlook, they haven't really raised it that much, and they quite frankly, they're pretty conservative in this earnings report too. So let's take a look at GameStop and their earnings. A little surprising that it's jumped around 10% since then. I was surprised that it dropped down into $15, $80, $16 range. That was just a ridiculous drop off. Let's look at their statistics first on GameStop here. So price to earnings is about 6 times earnings, which is S&P average is about 20, so very cheap in that respect. Now, what you want to keep an eye on is the 50-day and 200-day moving average. They closed above $18.17, not quite above their 50-day moving. But as they stay up above that, and certainly if they can get above their 200-day moving average in the 20s, so as they get closer to those, they have a very good chance of running up above that. So Good news there. That may become a self-fulfilling prophecy as people look at how cheap it is with its dividend yield. You might get enough action off that to buy in. Although people are really, really skittish on retail. So balance sheet, 22 bucks, almost 23 bucks a share. So it's well below its book value, uh, which is a good indication of a well-priced stock to buy into. Cash 260 million, debt 800 million, free cash flow, levered free cash flow, which is after all the expenses and everything, 529 million. So together, that and their cash about offsets the debt. And like I said, 22 bucks book value per share. So a lot of things to like about it, but it has been a dog because it's a retail stock and their segment of the used gaming business is going away as people download games. So the big thing with the GameStop, and we've talked about it a ton in multiple videos, is do you believe that they're going to turn it around with the collectibles business? And um, a lot of people are not buying into that, but um, I think they are. I like their collectible stores. I've seen some of them. Um, I think it's a market that is going to make a lot of money, especially if they can figure out how to do some used collectibles like they do with games and get a resale market going. I think it'd be great. Now, looking at the chart, pull it up here. You can see their big jump. The lowest I think it was 1580 something, 1591 I see. Um, Jumped up 1833, settled up about 1817. So huge gains, big pop off of that earnings. Now, again, over the year, they've got a lot of ground to cover. They need to make their way back up to 26 over the year, and over the 5 years, upwards of 50. So uh, they have been sliding pretty good. Um, they pay a good dividend, so you get some money off of that. So you may have been able to endure a lot of this pain if you're a long-term investor. Um, I think definitely they'll bounce back up there, and if you've been averaging down, again the dividend yield is pretty ridiculous. I think it was about 9% recently, and they consistently pay that out. So um, very risky stock. Had a good bump recently. A lot to like about it, and a lot of people dislike it. So um, let's look at their earnings report. I'll try and highlight this. I'll put a link in the video description to this and the conference call that's over at Seeking Alpha. Um, so some things that I don't like is when they put out the size of the market that they're trying to enter in. To me, that's just them kind of selling. This is how big the opportunity is to make the number look bigger. When they say it's a $12 billion addressable market, $8 billion, I understand that they're big markets, but um, I'm focused more on their growth in those markets and what they're doing. So, a lot of good positive things. Collectibles is what we really have our eye on. Um, New software, the fact that it grew is pretty good, and which isn't exactly surprising with the Switch and everything. And obviously, hardware, not surprised because of the Switch sales, et cetera, et cetera. Leveraging their online platform is doing well for them. So a lot of positives in their earnings, and they break it down by category. And um, you want to see this keep growing and eventually offset their pre-owned. And that's going to be a long road, but if they keep chugging along slowly, you're going to see a pretty good company with a nice dividend and cheap stock right now. So if they can turn that around, that'll be a good thing. And this shows what they're going to be doing with their money. Share repurchases. That's always good to hear. Basically, they're betting on that the stock price is going to go up, so they're going to buy their shares back cheaply, paying a dividend. Um, Potential mergers and acquisitions, they talked a little bit about that in the conference call. It's not really a big focus, so we'll go over that in a second. But loot sales, again, that's their big collectibles thing. A lot of good stuff on that. I'd like to see ThinkGeek develop some more stuff. They kind of hit and miss on some of their things that they put out there. Um, the power up rewards, to be honest with you, has been a bit of a disappointment. They talked big about adding the new tier to that and how they were going to reinvest a lot of money into that. And so far, it's been a little underwhelming. Some of the rewards and things that they have now, I don't do a lot of used gaming trade-ins, so a lot of it's been geared towards that. But really, you get a point, and you can get some. You can get the cards to uh, basically it's almost like 1,000 points is a buck. Um, so yeah, I mean you can make some good points and get a gift card and lots of free stuff, but it hasn't really been um, as appealing as I think it can be. Uh, they've got a lot of money that they're going to be putting back into that, so still more to come from that. But hopefully they step it up a little bit and offer some pretty cool stuff, some pretty cool unique collectibles. I feel right now you're getting money back in gift cards and things like that, or you earn more points with collectibles, which is fine for a lot of people. But um, I think with the money that they invest in it, they could really steal some shares from other people. But conference call. Let me pull this up here. Um, Try and go through this pretty quickly. The video is running a little long here. Um, Again, I'll put the link in the video description. It was very vanilla um, conference call, honestly. For as citing as of a quarter as it was, not a ton of questions on things I would have expected. I didn't see or hear the power pass them going into much details on it. But they basically explained everything that we went through in the slides there. One of the things that came up was the Xbox, or sorry, not the Xbox, the iPhone X, the iPhone 10. Um, they didn't get all the pre-orders into the quarter. It was only like 2 days worth of pre-order sales that they got in there. So uh, expect a big number next quarter on that. And a lot of the questions from the analysts were kind of around that, around AT&T and what they're doing there. So um, if you go down through where, um, and they talked about collectibles again, they went through everything in the slides there. Obviously, that's what they run off of. But in the Q&A, very surprised about how the questions have kind of turned from their used video game business and what they think about the upcoming consoles and things to they're very curious. People are asking a lot about the AT&T business and the iPhone business. So I think a lot of the analysts are starting to gear more towards can we get a pop off of a lot of the iPhone sales and stuff like that. So uh, you could look at that a couple of ways. One way you could look at it is they're fairly confident that they've cut the bleeding on a lot of the video game cycle and things like that, and in the downtrend with the digital offsetting that with the collectibles, and they're trying to sniff around where they're going to get some more business, where they're going to get a pop from. So a lot of, like I said, a lot of ways you could look at that, but very curious that's what they were talking about, and they weren't talking a lot about Power Pass. Um, so here, this is sort of the mergers that they were talking about somewhere in here. I really should highlight this ahead of time, but so questions about the consoles, the Switch, obviously. But a lot of asking about giving some more color, some more info on the AT&T, what they think about the Time Warner deal with AT&T, the iPhone sales, um, et cetera, et cetera. You know, so that was the running. That was the running. A lot of questions on that. They talked about. Someone asked about accessories and them potentially being down a little bit. Which if they're not selling a ton of accessories with the Switch and everything yet, give it time, they're going to sell a ton of them. If the Switch is anything like the Wii, there's going to be a million add-ons that you're going to get, especially with the way the controllers and things snap on. So I think if it's flat with the accessories right now, just wait. As the Switch matures, they're going to get tons of sales in there coming in, so that's going to help boost it a little bit. Strength of World War II, Call of Duty, Activision title, uh, really, really big strength there. So Activision is another stock that we like. And here's some where they've talked about the uh, merger and acquisition being a little quiet there, and more on the AT&T. So um, big uh, Call of Duty World War II is trouncing Infinite Warfare, and that's not a big shocker to people. So conference call, not a ton of stuff. Really, really focused on AT&T um, and iPhone sales. So I find that interesting. GameStop, we like it. Long-term investment. It's one of our kids' largest holdings, so uh, we put our money behind it and think it's going to keep going up. Watch for it as it gets past 19 and 20. It could run pretty good after that. So that's it for this episode. Give us a thumbs up if you enjoyed it. Subscribe if you haven't already. Get the latest investing news for gamers. We'll see you next episode.